Pretty nice down here.
Is it? Yeah, we've had some gloomy, wintry weather for sure.
Hey, Bryce, it looks like we did start the broadcast a little early, so I just want to let speakers know that attendees can hear us, and attendees will be getting started in about 5 minutes.
How do I hide that? Sorry, I hit the, or how do I stop that?
We are live, so we can't go back now, but we can just mute ourselves until we're ready to start in about 5 minutes.
Okay, perfect. My fault.
No problem.
Are you going to start with the title slide?
Good morning, everyone. My name is Bob Dearden. I am the Chief Operating Officer, the CFO for the Florida Restaurant and Lodging Association. I want to thank everyone today for taking time out of your busy schedules to participate in this morning's presentation. I want to first let you know that this presentation is being recorded and will be available on FRLA's YouTube page subsequent to the presentation. After months of stalling, weeks of intense negotiations, Congress finally passed a bill creating a second round of PPP, or Payroll Protection Program. This morning, we have two experts from FTR Hospitality that will walk you through the details of the program and describe what it means for your business this morning. FTR is a full-service restaurant accounting, technology, and consulting company that provides solutions that increases sales, reduces costs, and helps restaurant owners prosper. Our speakers today are Bryce Woodyard, CEO of FTR. Bryce heads up the outsourced accounting practice for FTR. He has 10+ years experience in accounting and finance, and he is a CPA. Our second presenter is Rick Van Warner, who's a partner with FTR. Rick was previously CEO of Tijuana Flats. He has over 35 years national restaurant experience. He's a former Darden exec, as well as former editor-in-chief for Nation's Restaurant News. So we're excited about the program today, and also want to point out that FRLA has a webpage for PPP guidance and information. It is frla.org/COVID-19. FRLA has a plethora of information if you're ever needing any kind of guidance on PPP related matters. With that, no further ado, I'd like to turn it over to Bryce to start the presentation.
Bryce, can you hear us okay? Sorry, folks, looks like we're having a little bit of technical difficulties. Rick, can you take off while we help Bryce with his audio for a minute?
Sure. So Bryce, just jump in when you're available. But just a quick overview that I can get through until we get to the expert, which is really Bryce. There's $284.5 billion in new PPP loans available. The terms are the same as they were the first go around, 1% interest rate, 5-year term, and the loans are fully forgiven if the proceeds are used for the allowable expenses during either an 8-week or a 24-week period of your choosing that begins shortly after the proceeds are received. Important to note that don't wait to move on this. The second draw loans you'll be able to starting tomorrow. They did do a first, most of the people on the call, that's the first opportunity you'll have to apply would be tomorrow. Bryce, are you on? Well, guess we're having, now I can't see the slides. So we're having a little bit of a technical issue here. So give us a moment, please. Bear with us. Maybe Ashley, you can take over the slides. So they did have a first go round, which was more focused on underserved communities, et cetera. And so they gave a couple day head start to some of those businesses. So who's eligible for this? Privately owned businesses, obviously, they're public, not so much. And certainly everybody that received a first round PPP loan is available. It's also open to first-time PPP borrowers. Independent location businesses, the threshold is less than 300 employees or less. For multi-unit businesses, it can be that are incorporated separately. Like if you have individual units that are incorporated separately, you can do it per location. with a maximum of $4 million in the total loan amount, $2 million in the other case. Big threshold on revenue is show a decrease of 25% or more for a full quarter of 2020 versus the same quarter of 2019. There's a, you know, for a smaller, for a larger loan, then there's typical, you know, bank application process and documentation that's required to get the loan. If you're looking for a less than $150,000 loan, then you have more time on the documentation. You don't really have to show the proof of that, of all the declines and how the funds were utilized until the forgiveness period, which could be, you know, several months down the road. And you have another requirement is that you have to have fully used all the proceeds from the first round of your PPP loan for eligible expenses. So we can go to the next slide. Bryce, are you on yet? So I'll go through this really briefly, and then hopefully we can get this back online here in a minute. $2 million is the maximum loan size for an individual, you know, for an individual business. $4 million maximum if you're applying for multiple loans across you know, different locations. Again, they would have to have separate tax ID numbers and separate business entities each location. For the most part, restaurant and hotel owners, it's the amount that you can apply for is your average monthly payroll cost times 3.5. So you can establish that by showing average monthly payroll for the 2019, average monthly payroll for all of 2020, or average monthly payroll for the 12 months prior to the loan origination date.
Hey, Rick, if I may jump in here.
Yes, please.
Sorry about that.
That's okay.
Sorry about that. What we're suggesting to people too is that you just, you know, if you're comfortable with what you received before, if you just reuse the existing payroll numbers just to keep it simple. We've talked to a couple banks where, you know, if you've already applied with them, you know, do the 2.5 times of what you've already instead of doing 2.5 times, do the 3.5 of what you previously requested. Generally speaking, it's going to be kind of the highest amount into your best interest to do so, and it just keeps it easy from a processing standpoint, so you can still use the same information that you provided before. Let's see. I think. Sorry, Rick, to jump in. If we want to go to did we cover the rest of this slide? Do you want to add anything, Rick? Or
not really. We do have a question already. What if you were not open all of 2019 to be able to do a year-to-year comparison? Can you take a quarter 1 2020 versus quarter 2 2020? Or I think it's got to be year, but you can answer this.
Yeah, so there are some banks that do allow you to take, are we talking about the calculating your payroll amount?
Correct.
There are some banks that allow you to take, I believe it's the first 2 months of the year, so January, February. You know, some banks I've seen deny that request and say, no, you've got to use 2019. And others are okay with the January, February. So it really partially depends on the bank, but if you look at what's happening, you know, we've had several instances where January, February of 2020 was used as the payroll calculator.
Bryce, if you would, before you move on, if you would clarify, this is another question, the definition of average monthly payroll cost. It includes what? Does wages, payroll taxes, tips, question mark? What's exactly in there that they're looking for?
So on we'll get into the tips in a second, but it's, you know, if your annual salary is $50,000 a year, then that is what is used in the calculation. There's no employer side on top of that. However, you can also use, you know, if there's employer health insurance, that counts in the calculation as well. And then for tips, it really comes down to what you reported. So, the credit card tips, if you're reporting that to the payroll company, you can use that as well. But if it's not reported, then you can't.
Okay.
If you wanted to go to the next slide here, I think it was just about the simplified forgiveness. It makes it pretty easy to any loan that's under $150,000, and that's per legal entity, not overall. So if you have multi locations and they're under different legal entities, then you can qualify for the simplified PPP loan.
Okay. I have a couple other questions. We might as well take them as we're going along here. One of them is somebody that opened their business in November 19. According to the rules, I have to take my Q4 2019 sales and compare it to any quarter of 2020 sales to see if I have a 25% reduction in sales. Since I opened in the middle of Q4, do I prorate those sales?
Prorate those sales as in, assume.
In other words, he wasn't open. Yeah, he wasn't open the full fourth quarter.
Yeah.
So they want, so he can't really go quarter to quarter, but can he prorate it based on, half a quarter to half a quarter?
So I have not seen that yet. However, in the first round, especially, some of this is just a discussion with the bank, because at the end of the day, they only need to submit a form, like one pager to the SBA. And so, I would ask the bank and see if they have a solution. Unfortunately, I haven't seen that situation yet, so I can't give a good answer. I will say that there is a carve out. So if you bought a business, an existing restaurant in 2020 and, knew the legal entity and everything, then you are still able to go back and use last year's sales in some instances. I know that doesn't answer this specific question, but just something else to be aware of.
So just a clarification, it is a 25% reduction in total revenues, right?
Yes, and one thing I will note too, and this is getting into the final slide, if for some reason that does not work, I think looking into the employee retention credit is probably the way to go. And with the employee retention credit, there is a revenue loss component, or there is a component of if your business was shut down. And that also applies to, restaurants that might not be down 25% year over year, as opposed to looking at the PPP. The employee retention credit could be the way to go, which is also pretty lucrative and valuable. But we'll get into that in the next slide.
Okay.
Hey, Bryce, let's go ahead and continue through the entire presentation, because I think a lot of the questions are going to be answered, and then we can circle back to questions that we may have coming in.
Great, sounds good. So, getting into the forgiveness, they've effectively made it easier to get forgiveness. The non-payroll items have expanded to vendor payments as well. So, if you're paying your food vendors, your Cisco's, your US Foods of the world, those now can count as your 40%. And then the remainder is kind of much of the same. It's a 60-40 split. Health insurance counts, wages count, but employer payroll taxes do not count. So it's intended to be a pretty similar forgiveness process here, except for the fact that now you can, in addition to including, rent, utilities, and debt payments, you can now include vendor payments as well, which is huge. Next slide. So this is getting to what we just talked about. It's much of the same as PPP round one, except for that very bottom section on operations expenses. Essential supplier purchases is the big one here, right? So now you can pay your food vendors. So, 20 to 30% of your expenses are now covered as forgivable. Only up to the 40% threshold, but that's still I think a big game changer here. And otherwise, it's much of the same. So this is what we were talking about earlier, the employee retention payroll tax credit, and this is just a brief dive. So previously, and we'll call it PPP round one, you could do an either or. So you could do the employer retention credit or the employee retention credit or the PPP. Well, now you can do both, right? And so you can get your PPP round one, you can get your PPP round two, and you can take the employee retention credit. However, you cannot take the credit on wages that were counted in PPP forgiveness. So what it looks like, and there's still some kind of guidance they're finalizing, but they seem to be trending towards is kind of this simple example, right? If you've got $1 million in wages, and you got a PPP round one worth 200,000 and PPP round two worth 300,000, then 500,000 can be eligible for the employee retention credit, which is effectively the total wages over the year measurement period, subtracting out the PPP wages. And this credit can get a little convoluted, but most payroll providers, if you're using an ADP, a Paylocity, they're aware of this credit and they'll be able to help you take that. So that's who you would reach out to and just say, hey, I'm interested in taking the employee retention credit. And you're just entering in your wages, and then there's a separate box typically for employee retention wages. And effectively the credit is up to $10,000 per employee, and the credit is 70% of that. So, if you've got employees over the course of a quarter that are paid $10,000, then you can get a $7,000 credit back. Going forward, that's typically a reduction of your payroll tax liability. Going backwards to get that money, so in between the PPP round one gap and the PPP round two gap, there's a form called IRS Form 7200 where you can go and apply and get that refund. Now that portion you'll probably have to do on your own, because payroll providers are generally taking the stance of, we'll help you claim the credit on an ongoing basis, but if you want to go back to the previous year, you'll have to file that on your own. So we would recommend maybe contacting your CPA and the best way to do that. But this is a big one because, if you can't qualify for the revenue requirement, or if you're in the situation where you just started your business in December of 2019 and you're not able to show a 25% revenue loss because of that, then all you have to do here is demonstrate a full or partial shutdown of your business, which, I think most restaurants and hospitality companies can qualify for. So even if, the revenue loss isn't there, you can't show it, all you really need to show is, hey, I was shut down, or hey, I was at limited capacity, so I qualify for this credit. So this is a big one and a really good alternative for a lot of Florida restaurants. All right, I think we already went over this one. One quick note though, the EIDL grant is now available again. It's got the same sort of revenue requirements to get the grant. That's the $10,000 where, the EIDL Advance, as they called it, there is more money for that available as well. So you can apply for that to get pretty quick funding as long as you can demonstrate a revenue loss. And that's through the SBA.gov website. And it's a check the box question on demonstrating the revenue growth. So or the revenue loss. So you are in fact saying, yes, I had 25% revenue loss and I need this EIDL advance. And even if you got your first advance, you are able to get a second advance. All right, time for questions.
There's quite a few here, so I'll start running through some of them. The group, just clarify the, yeah, go ahead. Not sure what that is. Group health insurance, Bryce, what is, how is that treated is that part of the 60% that you can claim as part of the payroll?
That's part of the 60%. So health insurance that you pay on behalf of your employee, the employer cost is one, it's includable in the payroll calculation for the 2 or the 3.5 times multiple. And then number two, it's also a forgivable expense in the 60% bucket.
Okay. For
As well as
seasonal,
401k plans too, and retirement plans.
okay, for the employer paid portion, right? Of
Yes.
all that. What about seasonal businesses? Does that mean that the business actually has to be closed for 5 months of the year?
To demonstrate the partial closure of the business, or
Yeah, to qualify under the seasonal business on the 7-month guideline. Does that mean it has to be closed 5 months?
I don't think so, but if you read it, the letter of the law strictly, that's effectively what it says. But I don't think it's really quite that strict, and it's kind of a bank by bank.
Speaking of banks, one of the questions here is, would you recommend that you use the same bank that you did on your first PPP, or go to a smaller one?
So for our restaurant groups, we don't have enough experience to actually know the answer, and I'll preface my answer with that. I will say that I think it's going to be easier just to use the existing bank. As we said kind of earlier, if you look at the new application, it's effectively the same as the old, and you can use, we're recommending using the exact same information that you used prior for the payroll calculation. And so because of that, we recommend going with the same bank that you used before, unless there was, big issues. But it's just easier from a paperwork standpoint, easier for communication with the SBA because it's already been done before. So we think that it will go a lot smoother. However, we don't have enough experience yet because applications just opened up on Monday for smaller banks, and Wednesday is tomorrow is when the bigger banks will open up. So we don't have enough history to see that, but on the face of it, I would recommend going with the bank that you got your first loan with.
Another question is about 1099 staff. Is round two allowing borrowers to include their 1099 staff?
No, but 1099 staff should technically file on their own. Now, they have made it easier for them to file on their own, and they can use their wages they received as the calculator. So they effectively have to do their own calculation and get their own PPP loan.
Okay. So I think you mentioned this before, but somebody purchased an existing restaurant in 2020 under a new corporate name. So they're eligible for a new PPP loan, correct?
Yes. Now there are some restrictions, and there are some issues that could trip somebody up. But yeah, in the simple situation of you bought an existing restaurant or hotel in 2020 with a new legal entity, you are able to use their sales for the prior year, even if it's a different legal entity, as long as it's the same business.
On the second draw borrower application, it asks for number of employees not to exceed 300. The question is, what time period does that refer to?
So it's a little bit vague. What we are telling our restaurant groups, and those that we are applying on behalf of, is to use what you had prior, or a similar number. So what you use in the initial PPP application, just to kind of keep it simple from there. And so use that number. And it's really a point in time measurement, not necessarily over the life of, over an 8-week period or not. It's, choosing a point in time and what were your FTEs on that date. So it kind of gives some vagueness, right? Especially for more seasonal businesses. But generally what we're seeing is the lower the FTEs, the easier it makes the forgiveness application.
So you, so essentially use the same payroll info in most cases.
Yeah, unless that's going to put you at a disadvantage, then you can potentially look at recalculating it. But we haven't seen a situation yet where that's been to their disadvantage.
So if there was severance packages paid out in 2020, can those be included in round 2 loans?
I don't believe so. I think it has to be ongoing wages. However, some of that is up to the bank a little bit, but generally speaking, the severance packages are excluded. And then you should also exclude them from the FTE count as well if you were using them.
I think there's a question about be able to calculate payroll for 12 weeks. I'm not sure what that is. When it comes to forgiveness phase, are there any limitations on payroll? Wages over 100,000. I think I did see that as an exemption, or all payroll costs. I think there is. Isn't there a threshold of 100,000 or something like that?
For payroll.
So when you're figuring your payroll, you can't include salaries over a certain threshold.
Yes, salaries over 100,000. Yep, that you have to cap at that 100,000. So if you have someone, a director of ops being paid 120, then you would just in your calculation just assume that they're making 100,000 instead of the 120. So you'd reduce your biweekly payroll figure by that.
Yep.
Hey, Bryce, I got a question for you. The first round of PPP was about 350 billion, with the second round being 284 billion. How urgent should people be in the queue with their financial lenders to get the process started? Should there be a sense of urgency?
I think so, yeah. This one is 284 billion, which represents about 55% of what was distributed last time. I'm guessing we're not going to get to that height anymore because of the revenue loss requirement, but I wouldn't be surprised if we quickly exhausted 284 billion. And as we all remembered, the gap between the first funding and the second funding, was like 30 days of unpleasant waiting, I'll say. So I would say this is very urgent. This week so the guidance was released to the banks last Friday by the government, and the banks, the smaller community banks, were allowed to start accepting applications as of Monday, and then the larger banks will start accepting applications as of tomorrow. So really, by the end of this week, I would guess that the application window should be open again, worst case early next week. And I would say, apply immediately. And that's also why we're saying, use the same if you don't see a detriment on the calculation side, just use the figures that you used the last time. Because all you're really doing, right, for the PPP is instead of 2.5 times your payroll, you're taking 3.5 times. And then the only added requirement is you show the 25% revenue loss. So the application looks much the same. And so if you've already provided that information once to the bank, you're effectively providing all the same information again. There's just about 6 extra boxes that you have to fill in on the application itself.
Right.
Ash, this is really Ashley Can. How did somebody copy the PowerPoint? Did they email you or something like that?
Yes, we'll have the copy of the presentation and a recording of today's webinar out to all of today's attendees and those who registered, and it'll also be up on the FRLA YouTube page and webinar site.
Okay. So there's still another question about, it kind of goes back to something earlier, but just to really clarify, the initial question, 25% gross revenue reduction. Is it okay to compare first quarter 2020 versus second quarter 2020 since the operation opened late in the year 19? In other words, does it have to be a year-to-year quarterly comparison, or can it be a quarter comparison between first quarter last year and second quarter last year.
So if you look at what it says strictly, I believe it's a calendar quarter or a fiscal quarter. So if you're not currently operating on that, the strict interpretation is you cannot. However, I am certain that there will be banks, and they might loosen up the restriction, the interpretation as well. But I'm also certain that there'll be banks that will allow you to, given that you open December, that they will allow you to do the December, January, February calculation. I don't know which banks those are, but some of that is a discussion with the banks. But if you even look at the application itself, it even says 2019 versus 2020. So the strict interpretation is no. However, I think they're going to end up loosening up a little bit, and also I think you can find a bank that's willing to do that. I would say in that scenario, the smaller the better. But then that's also if you're not able to qualify, the employee retention credit might be a good avenue.
Another question, can somebody estimate their cash tips and include that in the payroll calc?
Potentially, and it kind of goes back again to the bank's interpretation, right? So you're still going to the bank, you're going to have to show backup, and then the bank is then certifying that they did a reasonable review of the numbers before submitting to the SBA. So, I will tell you that some banks really, the review was very light, and so you could have done that. However, other banks would say, okay, where's the documentation? And if it was just, an Excel file, they would have probably turned it down. So, there's another one where strict interpretation says no, but I'm sure there are banks that would accept that into the numbers as well. And I think and that one I think is a little easier because, you can just, you're representing to them that these are, in fact, real cash tips. So I think that's a bank by bank thing, but I would say the majority of banks would accept that as long as, you're certifying it to them. And then, for the most part, you have backup to your numbers.
Somebody's asking the question on the form, any advice on answering the current economic uncertainty question? What do you say? Something along the lines of that the current economic uncertainty makes the loan request necessary to support the ongoing operations of the business. Is that something, how they're asking how to answer that question about why they need the loan, I guess. I can't hear anything.
Sorry, I was on mute. So I believe that's a check the box question on the application. So there's no specific backup that you have to provide. You're just in fact certifying to them that you need the loan. So it's just a yes or no. And obviously if you're applying for the loan, you're certifying that yes, I need it. So I don't believe there's any additional backup required. It's just you're just signing your name saying you need it. So you're in fact certifying that you need it. We haven't seen any situations yet where, backups need to be provided or an explanation even.
Is there truth to the fact that if you already got a round one loan that you can't go to round two until Friday?
13th.
Is that correct?
That could be the case. I don't remember the exact timing. There are certain delays, and I'm not extremely familiar with them, but I believe that it should be open to everybody by the end of the week, no matter which bank you use.
Okay. Just back on the forgiveness allowance for suppliers, food vendors, would that include, as possible of the 40%, the third-party delivery contract fees for like Uber Eats, stuff like that?
I believe so. I mean, it's not specifically carved out, but it's how they qualify it or is essential to the operations. And I think there's a great argument to be made that third-party delivery costs are essential to the operation. So I would say yes. I don't see a problem with including that. And really, I look at it as, for the most part, most of the expenses you incur on a day-to-day basis would kind of fall under that bucket. Supplier can also be your third-party provider.
Someone's asking there, and it's kind of a softball for FTR. I think the answer might be yes, but is there someone who can walk a business through this for a fee? Somebody help you do this?
Yeah. So, I would say, at FTR, we've got people, the fee should not be too much. It's a pretty simple application process, right? So, I would say be careful if we're talking, $10,000 fee to apply for a PPP loan, right? But, at FTR, we can definitely help you. And, if it's just a couple simple questions, I don't see why, we would just be able to answer the question, and then, you can go from there. But yeah, any sort of CPA firm would be willing to help. Obviously FTR, we've got a bunch of resources, based out of Tampa. We've got 50 accountants there. They'd be more than happy to answer this, and they're just restaurant accountants. So, but if it's easy to get in touch with us, I would say you can get in touch with us. If not, your CPA, and we can certainly help.
For the EIDU advances for the first round, do you believe those will be forgiven if you applied for it but did not accept the advance? But the application, I guess what they're asking is, what's up with the, somebody applied for the EIDU advance and didn't get it,
and never
but
received it.
application's now reactivated or something along those lines?
So if they didn't distribute the funds to you, there's no need, there's nothing to be forgiven. But, if you take it this time, I mean, in both instances, as long as, you can hit the check the box items, right? Do you have the need? Do you have the employees? And they're going to forgive it. And that goes with the first time and the second time.
Okay. Do you know what their definition of a seasonal business is for the purposes of this?
So they've got the kind of the 7-month requirement written in there, but what we've seen is banks interpret it differently. So most of the, smaller Florida banks we're seeing is, it's a kind of a loose requirement. So, I know that's not a really straightforward answer, but a lot of it's just a discussion with your bank, and the smaller the bank, the kind of the more understanding they are and the more flexible they are. So, I guess I'm trying to think of like a specific instance, but I know, for businesses where the sales swing, from period to period or season to season, I think you could qualify as a seasonal business if you wanted to, despite being open that entire time, just based on the sales swings. But, part of that is a discussion with your bank, because for the most part, and this is just in general, the SBA is relying on the banks themselves to kind of do the vetting. And then the SBA is effectively just receiving that one pager from the bank, and so what that basically means is the banks are effectively doing the underwriting. And, each bank's underwriting department's different, right? So a lot of these items are, I would look at it as a discussion with your bank.
What is the time frame to calculate the employee retention? Is it a quarter of payroll, ? 70% of what term, ? I mean, can you give any guidance on that?
Yeah, so it's a little bit tricky because they haven't written everything in yet. However, if you're getting the credit, so let's just say, this is the first you're hearing of it and you want to take the credit now. So, if you've got just a simple example, if you've got, for, on biweekly payroll and you've got, 100 employees and your biweekly payroll is $50,000 biweekly. So the credit, because all your 100 employees are paid under $10,000, the credit is basically 50,000 times 70%. So your credit for that period, for the biweekly payroll is $35,000. Now, you won't receive all of that up front, but each biweekly, your payroll provider should be returning to you whatever the payroll tax liability of that is. So if on that $50,000, 10,000 of it was your employer payroll tax liability, then they will go ahead and refund you that $10,000 until they use up the credit. And now you can keep calculating that credit, each biweekly, and the credit's going to keep building and building. And at the end of the quarter, typically the payroll provider will provide you the remainder of the credits. And so it's an ongoing calculation, right? And the only cap on that credit amount is once your employee hits $10,000 in wages paid for the quarter, then that's when your credit gets capped. But if that employee hasn't hit that $10,000 in the quarter of total wages paid, then the credit's going to keep calculating each biweekly payroll through June 30th, 2021. Now, what that means going backwards is you can then take, your wages going back to, I believe it's March 20th or April 1st, I believe, and effectively do that same calculation, just subtract out the forgivable PPP wages that you've used and do that same calculation, and that's where you file Form 7200 with the IRS. Now, it's probably going to take a while before you receive the refund in that scenario, but at least you'll be able to get it at some point in time. I don't know if that's going to be 3 months, 6 months, a year to get that back refund, but on an ongoing basis, that's why it's important to go ahead and contact your payroll provider now to see if they've got an easy way for you to claim it, because calculating it from here until June 30th through payroll is the easy way to do it. And it's a pretty instantaneous way to get cash back.
I think you answered this earlier, but can you do a PPP and an ERC at the same time?
So this is where it's tricky, and we haven't seen enough to know the answer exactly, but I'll give my opinion here. I believe you can. When you're going through the forgiveness, though, you just have to make sure that the amount of credit that you're claiming does not exceed or does not, dip into the PPP, for example. So what we're seeing in practice and what we've done for a few of our restaurant groups where we process the payroll is we've calculated what they're going to get for the PPP, and we've assumed the 24-week forgiveness period. And so we've effectively, what we're claiming on payroll is everybody's reduced by the effective amount of the PPP. So typically on your third-party payroll providers, you're going to have one column for your normal wages, right, where you entered in for hourly and salary. And then they're adding another column next to it where you're saying, okay, what do you want to claim for the employee retention credit? So we're just, in simplest terms, we're basically taking the PPP that we think is going to be forgiven over a 24-week period and then subtracting it from the wages we're paying to get to that credit amount. And so, that's what we're doing. Now, they could clarify some rules on that since it just came out. I think they're scrambling to define it, but at that moment, we see that that's reasonable.
Mm-hmm. So a couple more questions. Somebody applied for an EIDL grant earlier, got approved, but didn't take the money, right? So they reapplied just recently. And this time around, they said, yeah, we'll approve you, but they're just going to reactivate the first request as part of it. So I'm not sure exactly what the question is, but I guess it's not going to screw anything because that was not allowed, I guess, the first time around. So is that a problem?
And effectively they ran out of funding, right? So they couldn't give any more EIDL grants. I don't think that's a problem at all. If you didn't get it you didn't want to take it this first time around and you just reactivate the old. because it wasn't a matter of did you qualify or not, right? It was just a matter of there was no funding available to redistribute the funds or to distribute the funds to you at a certain point. So I don't see a problem with that. And it's probably the easiest way to go, because a lot of the EIDL applications initially were getting very crossed with, you know, if you're accidentally applied twice, right, it would kind of cancel each other out. So I think that's, you know, hitting the easy button, and that's what I would do.
And then, so basically that 10K should be forgivable, even though it was tied to an earlier app.
Yes, it should be forgivable. You know, you will have to, in your PPP forgiveness application, you will have to, you know, represent that you did receive that. And so it does factor in. So if you're, you know, if you barely got forgiveness, like you got to the dollar and then you got this EIDL advance on top of that, then it would not be forgiven. However, if you hit the forgiveness pretty easily or by $10,000, it effectively gets added to your PPP loan on top of it. And so you just have to prove that extra $10,000 of forgiveness. So you don't actually have to prove it, you just have to represent.
Okay.
Sorry, go ahead.
What would be your advice on whether you choose an 8-week versus a 24-week period?
So I think it really, obviously it's, can you get, the first question to ask yourself is, can you get forgiven over the 8-week period? If the answer is yes, or it's an easy yes, then just do the 8-week period. Now, if it's going to be close, or you're not sure you can get the forgiveness over the 8 weeks, then definitely 24 weeks. And if it's close, you know, you're right on the edge and you might be able to get 8 weeks of full forgiveness, then it kind of goes down to the second layer of questions is, you know, how is the employee retention credit going to be treated? And as it stands right now, the credit, it won't matter if you apply for the 24 or the 8 weeks, but there could be some clarification to the rule where it might matter, you know, keyword might, if you apply for 8 or 24 weeks, because what they could say is the wages that over that 24-week period are excluded from the employee retention credit. Now, they have not said that yet, and that does not look like the direction that they're trending in. But, you know, that could happen, which would make it more valuable to go for the 8 week. But at this point, it doesn't matter.
Okay. I think we've exhausted all the questions unless anybody has any more. Bob, do you have any more questions, or you think we've covered this pretty well?
Yeah, Rick, I just want to cover just one last thing, just kind of main takeaways from today's presentation. One, if you did not receive a PPP loan previously, or you're in a business that's experiencing a 25% reduction in one quarter of 2020 over 2019, you can apply for the PPP, this new round of PPP. Secondly, businesses applying for loans of $150,000 or less, and based on the same calculation, that was a 2.5 times 1 month payroll, do not have to submit new documentation if applying with the same lender. And then lastly, get started now. Contact your banker, get in the queue, make sure you're getting started as soon as possible to make sure that you're receiving these funds. Rick or Bryce, is there anything you would add to the main takeaways?
Nope.
Okay, with that, I want to thank everyone. Okay, with that,
right.
I want to thank everyone for participating in today's call. Rick and Bryce, thank you so much for your expertise and your time this morning as well. We appreciate it very much. Everyone have a great day.
All right, thank you.